Right. Well, hello and welcome everyone to the Chamber of Digital Commerce Parallel Live event, Bitcoin mining, fact, fiction, and a look into the future. My name is Tom Mapes, and I've recently joined the Chamber of Digital Commerce as a senior policy analyst focusing on Bitcoin mining. Bitcoin mining is undergoing a massive transformation that will have a significant and long-term impact on the future of digital assets. As miners are forced to shut down in China, many are fleeing to North America, offering a historic and valuable opportunity for the miners in the US, Canada, and other areas to lead the world in developing this surging industry. Growth in Bitcoin mining will advance national security, unleash a super cycle of green energy, innovation, and boost local, state, and national economies. And here at the Chamber, we are ready to seize this opportunity with our members through proactive government advocacy, lobbying, media engagement, and education. Today, we have some of the most important leaders in the mining space with us to talk about developments in this sector, including how an industry that, according to the Bitcoin Mining Council, only consumes 0.1% of the world's energy production, has received so much media scrutiny. We must counter information on this topic and chart a path forward. With that, I turn it over to the moderator for panel one, Dan Held, an incredible champion for our industry, a wealth of knowledge on mining and energy, and in his day job, the Director of Growth and Marketing at Kraken. Dan, take it away.
Thanks. I'm really excited today. We've got a killer panel of folks. These are industry leaders in mining. So I'm going to quickly run through and give a brief bio on everyone. And then from there, we're going to jump into questions. We've got Whit Gibbs. Whit Gibbs is the CEO of Compass Mining. Compass Mining makes it really easy just to get started mining Bitcoin. So they, as a retail trader, you can work with them to spin up your own miner. So they're a really big company in this space. We've also got Russell Kahn. Russell's got over 20 years of designing infrastructure around computing systems, really big, high energy intensive sort of environments. He currently is at Core Scientific, but yeah, he's another big industry. Core Scientific is one of the biggest players in the space. We've got Ryan Condron. Ryan has worked across a wide variety of different mining algorithms and protocols. So he worked, for example, he had a mining pool which switched between 80 different altcoins. So he understands mining very intimately at an aggregate level across different types of cryptocurrencies. And then finally, we've got Dave Peril. Dave is the CEO and co-founder of Compute North, and he's got over 25 years in the IT and information security industry. So we've got some big heavyweights here that are going to jump in and give us their thoughts, their professional opinion on the state of mining and the FUD. And today we should dig into some of these top topics that I think most of you have heard of in the press. Most of you have heard about Bitcoin in China and mining. You've heard about Bitcoin's energy consumption. So we're going to tackle some of those, I think, top of mind questions. Let's go ahead and start with Russell. So Russell, question for you. Recently, we've seen a big exodus of miners from China. What's going on? Can you give us kind of a very brief TLDR of what's happened in China?
Yeah, very brief. The Chinese government, China has got more renewable energy than anybody else in the world. They have excess renewable energy that could power most of the countries of the world. The problem China's got is transporting that power from where it's produced to where its population centers are at. And here recently, they've started to build out some of that transportation so they can move that stuff to where the population centers are. And prior to doing that, though, they had operated a lot of coal plants. They built a lot of small coal plants to try to provide the power around the country. And they've seen the environmental impact of that, but they've also seen the economic impact of that. So I think what they're looking at, and this is my humble opinion, who can guess with the Chinese Communist Party in China, but they're trying to solve that problem of the power that they currently have been almost given away to Bitcoin miners during the rainy season. They now need that power to try to get to where all the population centers are. And I think this is kind of a quick hit to see exactly what the grid will support without the Bitcoin mining that's going on there. As far as leaving, I think those folks that are involved in the capital markets are going to try to go to North America. I think those that are privately held are going to move into Kazakhstan, Russia, Central and South America countries, of course, some stuff in the Middle East, but all those that have any interest at all in being associated with the capital markets are going to have to go into North America and possibly a little bit of a space that's available kind of in Northern Europe and the Scandinavian countries. I think the new generation stuff is going to find homes first. I think your most recent generation of 17 series and M20s are going to be second. And quite frankly, I think it's going to be a long time before that army of 9 series and that older stuff that was actually profitable in the rainy season in China during the recent run-up of Bitcoin. I'm not sure exactly when it's going to come back on again.
Thanks, Russell. Appreciate that. And Ryan, is this good for Bitcoin? Is the exodus of miners from China good for Bitcoin?
Absolutely. I honestly think this is going to provide a lot of stability in the space. A lot of the price fluctuations, hash rate fluctuations, a lot of it comes from China. So I think this is going to provide a ton of stability in the mining market, a ton of insight and transparency into the mining market. So I think this is a huge win for Bitcoin, honestly. And then if you want to just look at the green and renewable energy factor, I think it's going to provide a ton of oversight in that regard as well. So absolutely, I think it's great.
Thank you for that, Ryan. And Dave, what have you seen on your end? I know that recently in the press, you've been quoted as to have seen like kind of a big upsurge in miners coming from China to the US. Can you expand on that?
Yeah, I'll add to what Russell said. I mean, it's amazing what has happened in this industry in 60 days. I mean, 60 days ago, we were all talking about equipment shortages, the inability to get ASICs and those kind of components, and how the narrative has just drastically shifted the amount of inventory coming online from China. I think Russell's absolutely right. And I would also agree with Ryan's sentiments that I think the decentralization is a good thing. I think lack of geopolitical risk is good. We're certainly seeing obviously a big influx here into the US, and that continues to grow. And I concur. I think all these are good trends long-term. It's going to take some time for this to shake out. I mean, the infrastructure just simply doesn't move at the rate that some of these devices can be taken offline and shipped overseas. And so I think it's going to be a bit of a long crawl back, but I think, the operators that you have on your panel today and the ones that are really influential in this space care about the narrative, they care about ESG, they care about some of those components. And long-term, I think this is all really good for our industry.
And Whit, I want to take a little bit of a derivative of this question. What have you seen narrative-wise or kind of story-wise around Bitcoin mining now that China has left the picture?
Well, so whether or not China has ultimately left the picture at this point, I think is still up in the air, right? There are some who are holding out hope that machines may get plugged in China again. That remains to be seen. I think we will get a clear picture of what's going on in China at the end of rainy season in October, although all signs would indicate that the hardware is all moving out, right? The hardware is moving out. The facility owners are looking to get out of China as well. But really what we're seeing now that the narrative is shifting, and I think that a word in particular that Ryan used is very important, and that's oversight. I think now that the hash rate is shifting out of China, what we are opening ourselves up to is more oversight into how Bitcoin is being mined. If that hash rate, the majority of it, finds itself within North America, Canada and the US, that is, I think that we are going to see more regulations come down just in how Bitcoin is actually mined. And I think that, to a certain point, regulatory clarity is very important as big companies scale within the Bitcoin mining space. But obviously with the ethos of Bitcoin, oversight is not always a welcome thing. So we'll see how that all plays out.
And Dan, if I could add, I think the diversification for the Bitcoin network globally is a tremendous value. But in my humble opinion, I would also love to see China, once they figure out their power stuff, to get back into it. China is a world economic power. It's got a huge piece of the world's population. It's a huge population there has adopted Bitcoin. So once they figure out their power grid, their ESG, environmental issues, all that kind of stuff, even if it's after the next halving event, it would, in my mind, I'd love to see China go back to opening up mining again, because as a country, they do have the power infrastructure and they have a huge amount of renewable power. But again, I do like the immediate diversification that's going to happen across the globe, but I'd love to see China eventually open back up again, not to the 70% of the network that it had before, of course, but certainly, 35% of the network in China for the overall Bitcoin network would be a good thing.
So, well, to Russell's point, it's going to be interesting to see the reaction over the next 24 months of what was the true requirement. What was the true initiative of why this occurred? Was it really about environmental factors? Was it really about, the infrastructure, or was there something else at work in regards to capital controls and just some of the Communist Party requirements? So I think it's going to be fascinating to see that play out.
I would keep in mind too that we're moving a consumer form factor of miners, right? These are little toasters that were originally straight to consumer sales. So this is not an enterprise form factor for mining hardware. I really do think if Bitcoin continues to get a hold on just currency markets and store of value, China will come back into the market, but more in an enterprise energy efficient form factor. I don't think they're going to do it in massive facilities with hundreds of thousands of devices. I think it's going to be more large blade type infrastructure with liquid cooling, way more energy efficient.
And Whit, what you kind of focus more on the retail side a little bit. Do you think there's going to be a kind of a potential resurgence of retail mining because of this activity, or what do you see in that sector?
So we have seen a resurgence already in retail mining. So to the tune of, at least through the Compass website, day-to-day sales about 300% of an increase, just with retail coming back into this space. I think that now more than ever, especially after the last difficulty adjustment, mining is hitting this golden era of profitability. And if you're able to tap into the right economies of scale, it's a venture worth taking. So we are seeing retail get more and more involved. And I think that that's a byproduct of just Bitcoin's expansion overall, right? Over the last year, we've seen so many new market entrants, so many new Bitcoin hodlers that have come into the space. And there is a lot of value to be placed on the security of Bitcoin's network. And ultimately, that's what mining really is about. So you have these Bitcoiners who also now have the opportunity to participate, and they're jumping on it. Obviously, with all that's happening in China, it's driving down hardware prices, which is a big hurdle initially that people have to overcome. $10,000 as an expense it's a hard hit for most of American consumers. But once you drop that down to $4,000, $5,000, it's more palatable. And I think we're going to continue to see more retail come into the space over the next few months.
Well, everyone, really appreciate the kind of the update on what the state of the mining industry is, what was happening in China. I want us, though, to go tackle some of the biggest FUD, environmental FUD. This is what we've all heard. I think I see everyone smiling here. We constantly hear that, Bitcoin is wasteful, or that it's a polluter. It's environmentally unfriendly. And let's go ahead and start with Ryan on this one. Ryan, can you help us debunk this narrative, or what's your hot take on this?
Yeah, so I spoke at Bitcoin Miami, actually specifically on this. It's it's illogical. Like there's so many things I want to say about it, but in a public forum, we'll just say this: that if you actually sit down and understand how the energy grid works and how load has to meet production, and how we're currently doing production following, and we're using non-renewable energy to do load following. So we're ramping up and down production based on load. And this is all to keep the energy grid balanced. I think it's just a matter of education, because once people actually understand like the basics of the energy grid, and understand what Bitcoin mining can actually do with renewables, because you can't do load following with renewables, we can actually solve the scalability issue with renewable energy using Bitcoin mining. If you just want to do a quick case study, and for everyone listening, if you want to Google it, just look at California's renewable energy production, even in Palm Springs, and what happens during the winter when we're producing a ridiculous amount of solar energy, but no one's running their AC units. There was actually a moment where we actually had to pay Arizona to take energy off our grid. So rather than selling energy, we were paying people to take it to balance the grid. But if we had large mining facilities that could counterbalance the solar production, where we could actually do production following rather than load following, we could actually scale renewable energy in this country to max power all the time.
And Whit, what's the But what's kind of the easy to understand defense or pushback against Bitcoin is bad for the environment?
I think that when you look at the past couple of studies that have looked at overall consumption of power by Bitcoin mining, whether it's Bitcoin Mining Council stating that it was 0.1%, or going back to Cambridge's study in 2018 that said it was 0.55% of the world's power consumption. If you were thinking about attacking an industry with the intent of making the environment cleaner, right? Bitcoin's probably not the best place to start, right? I mean, you're not getting a whole lot of bang for your buck. So I think that what's happening is we have non-state money that is now coming into an era where more people are understanding of it, more people are accepting of it. We've moved past this whole, it's shady, it's the dark web, it's for illegitimate causes. Now it's being seen as a viable asset class. And you're going to have the stragglers that are going to throw out the FUD and the smear campaigns and try to, get those last ditch efforts to kill it. I think that's what we're experiencing now, right? Resistance is greatest just before the breakthrough. And I think that that's what we're facing right at this time. It's just the max resistance that we're going to face on this energy debate until people are able to really see, like Ryan stated, the net positives that Bitcoin mining, industrial and small scale, is providing for the power grid and for this movement towards cleaner energy globally.
And Dave or Russell, when do you think that moment will be where the negative energy FUD, the fear, uncertainty, and doubt around Bitcoin's energy consumption and the environmental concerns, when do you think that will start to fade away? Is there a catalyst moment, or is it more gradual as education becomes better? What do you guys think?
I can start. I think the energy argument is the lazy argument. And candidly, the most of it, I see it from people that don't like, or most importantly, don't understand Bitcoin, don't understand blockchain, don't understand decentralized permissionless networks, and get how this works. And as a result, the easy thing to attack is energy usage. And I always use the example, like, I think the same way about Facebook, right? Don't like Facebook, don't use Facebook. Like, I think it's a waste of energy, but that's my personal opinion. I think the focus, as Ryan alluded to, is on the grid, is on the generation side and how that goes about. The number that's always really stood out at me is that 19 times more energy is wasted across the world every single year in congestion, in times of stranded power, than even the Bitcoin network uses. And like, those are the types of opportunities that I think we need to advance and move forward. And when you start to think about that, to Whit's point, like, there's a lot of other low-hanging fruit that is really bad for the environment that we should tackle. I simply don't think that Bitcoin is in the crosshairs. But again, I'll reiterate, if you don't get it, you don't understand it, it's really easy to say that uses up too much energy, and it's a waste.
Yeah, I'll add, so at Core, at the end of this year, we'll have 548 megawatts of miners on. We're building and adding already another 550 megawatts in 2022 that's already inbound. We're going to double that capacity to try to reach out to some of our Chinese friends that need some help right now. So I say this with a little bit of authority on understanding the power grid. Bitcoin miners are cheap bastards. And we're going to go where the power is the cheapest, where it's stranded energy, and where the power company says, I can give you this power over here, a lot of it for really cheap. And, that's renewable energy. That's hydro, that's solar, that's wind, that's nuclear. But there's also a big play here on grid stability. We saw that at Texas in the wintertime with the winter freeze. And at Core, our partners, the big power companies we're working with, are just now realizing the grid stability play here. In 2017, when we told somebody we needed 100 megawatts, no power company believed us. They're like, you're absolutely crazy. That's not going to happen. Now we say, hey, we want to do a Bitcoin mining farm. We need 100 megawatts. They're really looking at it going, okay, what kind of curtailment can we do? Can we do 12 hours? Can we do 30 hour? Can you do a 5-minute curtail? Can you do 30-minute curtail? How can we add back to the grid? Can we do economic curtailment on the hourly rate? Because it seriously is a solution for the power grid in any country. And which is why I think a couple of years from now, we'll see China moving back to it as well, because it can be a great grid stability play, and it can be a great use of stranded resources where you already have production somewhere. As a society, we've already got the sunk cost. The real environmental impact has already been felt. But if you can get this stuff going again, like your old smelting plants that were just horrible for the environment, but you can reuse all that stuff. And I think it's going to be an education thing. And uh, quite honestly, that education is going to have to come from the power industry, because it's going to have to be folks that are really in the know. That for any other reason, politicians and the general public kind of believe them. Let the power companies help do some of that education, and I think that some of that's coming down the pipeline.
Yeah, after being in the space for 9 years, I very much look forward to the day when we don't have Bitcoin energy FUD. It's I would say it's the one constant in the space is the FUD. Some of this FUD persists for a long time. And for the audience, I think a couple more clarifying points I'd like to add. One, everything requires energy. I think Dave brought up a good point of like, if you go on Facebook, he doesn't value that, but you might. Well, Facebook uses a lot of energy. That doesn't make it a bad or good thing. It's just simply how the world works. Or if I watch the Kardashians and someone else watches the Discovery Channel, is that a better or worse case of electricity? No one would ever criticize you for watching the Kardashians. And similarly with Bitcoin, the Bitcoin participants value the Bitcoin network, and that's why it uses energy. So ultimately, it's kind of a subjective play. And then I think as well, Dave highlighted, there's a lot of metrics that kind of convolute Bitcoin's energy consumption, where they compare Bitcoin's energy consumption to a small country. Well, you know what else uses the amount of energy of a small country? U.S. Christmas lights. Well, no one's here to go ban U.S. Christmas lights. We all agree it's a frivolous but fun thing to do. And so I think that, when you look at the data, if you see some of that data where it seems very large, well, a lot of uses of energy are very large if you look at different industries. So wanted to call that out, just kind of close it out on the energy FUD side. I've got a question that's still a little bit related to China, but more of how Bitcoin mining functions, because I think a lot of people are confused as to what role do the miners play in the Bitcoin network. And Whit, I want to start with you here. Can you describe for the audience, what exactly the role that Bitcoin miners play, and do they control Bitcoin?
So in short answer, no, the miners do not control Bitcoin one by one, but all together they work to secure the network and to ensure that new blocks are added to the chain to continue to validate transactions and allow the blockchain to progress, simply put.
Thanks, Whit. And Dave, can you expand on that a little bit, or if you have a different definition?
As far as, can you repeat the first part of the question in terms of who's making the control on the network?
Yeah, what role do the miners play? Like, what's their
what
function?
role do miners play? So essentially, I guess the layman explanation I always say is they're providing the security and the enhancement to actually run it. I always use the analogy that if you look at the way American Express works, when you charge your credit card, you go to a Shell gas station, you put it in there, transactions recorded at their data center, it gets put on your statement, the money goes from A to B. The miners play a similar role. I always think it's important to understand the way pools work within the greater ecosystem, and how some of the actual voting and I guess protocol controls is actually done at that level. So when you actually take it down to an individual miner, I think it's a lot less in terms of the importance of where that knowledge and understanding lies. And I think that how they ultimately control the network, I think, is really underestimated and sometimes misunderstood.
And Ryan, can you give us, can you explain in simple terms what mining pools are?
Yeah, I mean, essentially they're buying hash rate. So there's on the control side, the misconception is that the miners have control. A lot of the miners sell off their hash rate to mining pools, and the mining pools technically are the ones that will do the voting on the protocol, the choosing of the transactions, the creation of the blocks. So simply put, a mining pool simply purchases hash rate from miners at a profitability calc, and then uses that hash rate to mine blocks. Typically, the way the pool makes money is it'll bank on the luck versus the mining fee. So it's just yeah, that's as simple as I could put it.
Russell, do you have another take on that?
So no, I mean, he's absolutely right, Ryan. I think the misconception is that miners control any of the protocols and that kind of stuff. The pools really do. But I will say, interesting, since you're asking about Bitcoin mining operations, I see a lot of Bitcoin miners currently getting into the space as hodlers. And I think if I look back, and again, I've only been in this space as a miner since 17, there were people mining Bitcoin for income and revenue streams. I think now people are choosing to mine as hodlers and using mining as a way to acquire Bitcoin at less than spot. And I think that's very important for Bitcoin in general, because if the miners are selling their Bitcoin, that's one thing. But if I'm telling you right now, and I'm seeing it big time, most miners are now getting into this game to acquire Bitcoin, not buy it and sell it. So I think that's one of the things that new Bitcoin mining operations are seeing a lot more of, and I think that's kind of important. But Ryan made a good point, and Dave did, that the miner guys don't really control protocols and everything. We provide the processing power to support the network, but the pools are really the ones that handle the protocols and any of those kind of changes.
I'm going to open this up to the floor. This will be our, oh, sorry, go ahead, Ryan, were you about to say something?
I was going to say, simply put, kind of back to hash power, simply we're translating electricity into hash power as a subsidiary commodity. And then miners sell that commodity to pools to actually do something with it. Some larger scale miners will run their own pools, but majority of them will back one of the top pools.
Which, by the way, super interesting is the number of North American pools that are really getting off the ground. Titan, Foundry, Luxor. And I think that's great for the overall industry to have geographical diversification of pools. I think that's almost as important as the geographical diversification as the miners themselves.
Yeah, in 2017, you could not find a North American pool.
You could. None existed.
Right.
Sure.
And I think a lot of people have a misconception around mining, that mining is free money. A lot of people go, oh, I mined Bitcoin back in 2010 and it was like this free, free fountain of money. And this is opened up to the floor. Can someone walk me through mining economics for a miner?
2010, it was free money. I'll let some of the bigger facility guys answer that one, because they feel that in their soul.
Anything but free, right? So what's fascinating about Bitcoin is not only is it just groundbreaking tech and like really forward-looking technology and just innovation that I think is obviously unique to the world, is the understanding of the economics and the way currencies and even just human nature to some extent, the way that it's designed is just quite amazing. And when you start to think about it, the way that even things like difficulty adjust over time to ensure that there's always some sort of computational power put forth to continue the network forward, it's so forward thinking. It's pretty amazing. And to think that it's been, this was all put together 13 years ago in a white paper and then created, and here we are, and it's creating a whole new industry and a whole new ecosystem. But when you start to think about, the main costs of how do miners make their money, it's somewhat simple. It's the cost of acquisition of the equipment. What does that look like? We normally measure that on a per terahash type basis. We talked a lot about this earlier, but what cost you get in at certainly matters and impacts it. Then it's your OpEx, right? Like, what is your electricity and what is your overall operating costs when you're a hosting provider like Compute North and, Core Scientific and Compass, you're aggregating that down and normally giving it one simple number. But if you're a self miner and you're just looking at yourself, that energy component is crucial. And then making sure your overhead is extremely important. I think understanding that in a down market, that low cost wins. Russell alluded to this. The reason miners are really cheap is that there's up markets and down markets, and the experienced guys have lived through both. And you got to be really smart and really thoughtful about the way that you purchase and buy electricity so you can work through any market. And we're seeing this right now. I mean, I'm definitely aware of customers that are taking very high priced energy because they see the opportunity cost and they're ready to roll with it. And it looks great. But the problem is when you always take things up into the right, you really got to think through what's that sensitivity analysis look like in a different case scenario. Those of us have been in the market, in the industry for some time, know that things can and do change. And when all this new hash power comes on board, it's going to 2x it. When there's another halvening, you're going to, your revenue is going to increase by half again. What happens to the price of the coin? Nobody knows. And I think just really so you got to manage what you can control. And those are your costs, and that's being thoughtful. And I think to what Russell talked about earlier, the way to get the lowest cost is just being very, very thoughtful about your energy purchase. Use interruptibility, using curtailment, using demand response programs to really be, a strategic element to the grid, getting behind the grid and not being a burden on it as much as possible. Leveraging the fact that it's hundreds of megawatts, it's 95% plus load factor. And I mean, that type of load is like Christmas to energy and power companies. And I concur with what Russell said too, is that is the biggest, I think, mandate and the loudest voice that has a track record that can really change the whole narrative on the industry of how does this go from this power FUD to really being not just about, the next generation of compute and what we call Compute North, the tier 0 computing, right? And it's an exciting place to be. And I think it's going to continue to be very thrilled with different changes here over the course of the next 24 months.
I would add just a little bit. There's one more cost in there that's real important, and we're experiencing it right now, and Dave is too, and that's capital needed for the infrastructure. It's huge, transformers and switch gears. But I also want to say, along with the Bitcoin network, as far as mining is concerned, I'm always fascinated by how it's really new tech and new economy meets old economy. Like at Core, we transferred an old Levi's plant. We've turned to old smelting plants, old carpet flooring plants, and old power infrastructure. So like really old school switch gear, transformers, all that kind of stuff. Stuff that's we've built the industrialized world on is now being repurposed in a way for what I think is going to be the way the economy moves for the next 100 years or even more. So I find that part just fascinating. So.
Yeah, that is a really cool way to end this. Whit, I want to give you one last chance. You'll be our last comment for the panel.
Well, I mean, when it comes to everything that Russell and Dave have said, they're spot on, right? The one thing that we're seeing now more than ever, and Russell alluded to this, is that Bitcoin miners are more bullish than they ever have been. They are holding their coins. They are not spending them. They're raising capital. They're taking on debt in order to make sure that they don't have to sell their Bitcoin. And this is a new dynamic that is very recent to the Bitcoin mining space, because before the thought was you're selling some coins to pay for your monthly OpEx. And now there's different and creative structures in place and financial products in place to allow Bitcoin miners to hold for longer. And it's really working in favor of Bitcoin itself and the Bitcoin mining community. So I'm excited to see that continue. I know we're all bullish on Bitcoin here.
Well, again, I want to thank everyone for participating in this panel. Ryan, Whit, Dave, and Russell, again, thanks. This was awesome that you guys could take some time to educate us on the Bitcoin mining industry. And Tom, I'll hand it back over to you.
Thanks for having us.
Thanks, guys.
Thank you, Dan.
Thank you all. And looks like continued education is going to be very important in this field here. So we're handing it over to panel 2. Open the floor to Fred Thiel, the CEO of Marathon Digital Holdings, and Zach Bull, the Chief Content Officer at Compass Mining. They will discuss exploring the state of U.S. mining.
For having us.
Thanks, guys.
Thank you, Dan.
Thanks, Tom. That was a really great panel. Awesome to listen to. We're going to switch to a little bit of a different conversation format here. It's my pleasure to chat with Marathon CEO, Fred Thiel. Marathon, of course, is one of the largest publicly traded mining companies in our industry. Fred joined Marathon as lead director in 2018, but became CEO April of this year. Prior to, and in some cases in conjunction with Marathon, Fred has worked with a variety of tech companies, including Odin Technologies and Sequence Software. Now he's at the helm of Marathon. And we're going to jump into a few different categories of topics. Talking about high-level observations of the mining industry now, shifts and changes in sort of the industry dynamics, growth and challenges for Marathon, and then look a little bit forward at the end to some predictions and projections about mining. But Fred, thanks for sitting down with me here virtually to chat a bit. I'm excited to jump in.
Thanks, likewise.
So I want to start off a little bit, kind of like super high level here. We were both just watching the panel right before us, and there was a lot of talk about what you might label the Americanizing of Bitcoin mining, given the crackdown in China, the sort of the global shuffle of miners and machines around the map. A lot of which, not all, but a lot of which is ending up in the U.S. and Canada. Pretty open-ended here, but can you just share your thoughts from your perspective at the helm of Marathon, watching this massive geographic shift in hash rate and how it's affecting sort of your outlook on mining?
Well, I think, as one of the panelists said on the prior panel, miners today, and especially in North America, are super bullish. You essentially, the Bitcoin mining industry is an industry where it's a zero-sum game. There are 900 Bitcoin made per day, and it's an all-out drag-down fight for who controls what percent of hash rate. And I don't mean control so much as who contributes so much of the hash rate, so you can, through luck, win the right number of rewards that you need to manage your business properly. So we don't control the global hash rate. We don't control the price of Bitcoin. The only thing we can control is how many miners we can deploy, what we pay for electricity, and how much uptime we have, if you would. And so that's the key thing. So we're all constantly focused on this game. And as soon as the global hash rate dropped by, essentially roughly 50%, it all of a sudden makes all of our mining pools and our mining operations that much more profitable to operate, just relative to the fact that we're now producing that much more Bitcoin than we would have before, because we're not having to share as much of it with the Chinese miners that have gone offline. I think personally that that also creates an incentive for more miners to get in the business. I think between the top 5 or 6 North American miners, you're going to see an additional 40 to 50 exahash coming online between now and early next year. Add that to Chinese miners, relocating to Kazakhstan. So say maybe that's 25 to 30% of the Chinese miners did that. And the other 75% of that hash rate is now going to come back in North America and other places. And yes, there's going to be a lag over, getting power contracts, getting hosting, and getting machines delivered. But, I personally see us back at kind of where we were earlier this year, early next year sometime, most probably from a global hash rate perspective. So we're all taking advantage of this right now. The other thing I think American companies, at least North American companies, have been able to do is have access to the equity markets. When you have access to the equity markets, you can raise capital. Marathon last year and earlier this year raised over $500 million to go out and deploy. We placed the single largest order with Bitmain last year. We're in the process of growing our mining pool 5-fold from where it is today. We're at about 2 exahash today. By the end of Q1 next year, we'll be at 10 exahash. That's enormous growth. It requires a huge amount of capital, hundreds of millions of dollars, and we're doing it without selling Bitcoin, and we're doing it without raising debt at the moment. So we're very bullish, but it's becoming a big boy game. And I don't mean that in any arrogant way. I simply mean it that you have to be a professionally run organization, really tight operations. You have to have access to to the mining hardware. You have to have access to power. You have to have access to hosting. And if you're in the public markets, it means you need to operate like a professional public company. And that's not necessarily easy to do when your operations aren't in the US. And so I think you're going to start seeing this professionalization of the mining industry as it becomes more of a North American kind of business. But there are going to be lots of opportunities outside of North America for miners to relocate. Obviously anywhere there's good access to geothermal power, which is the ideal renewable energy source next to hydro, because it's available 24/7, 365, a lot less expensive to build geothermal energy plants than hydro. So I see actually we're going to see an explosion in areas like Latin America, Central America, Africa, places where there's cheap solar, there's good wind, or there's good geothermal. And that's even before I say the word nuclear, which within 3 to 4 years, you are going to see, a container the size of a typical mining container, small nukes being able to be deployed in places where you have, infinite power at, yes, high CapEx cost initially, but your operating cost going forward becomes very low.
Sure, absolutely. Yeah, there's a lot to unpack there. I think like at a very high level, mining is sort of a game of plugging in computers the fastest for the cheapest cost. But then once you sort of unpack what that process entails, it gets quite a bit more complicated. And like you mentioned, it's there are significant advantages, I guess, to relocating to North America for a bunch of these miners compared to maybe operating where they were in different parts of Asia beforehand. Most notably, access to more sophisticated, robust capital markets, and also sort of more reliable or clear or in many ways predictable regulatory regimes. But I want to unpack a couple of the things you mentioned, because as we see this shift, the shift in global hash rate distribution, there are various pain points in industry that are in some cases becoming much more apparent and sensitive, and in other cases sort of subsiding or being ameliorated by this shift. Speaking specifically from Marathon's perspective, what are some of the pain points that you maybe have been experiencing in sort of growing your hash rate and Bitcoin production that may not be as poignant or painful now as they were, and other pain points that are maybe becoming a little bit more troublesome that you're strategizing around and working through? Can you speak to both of those scenarios?
Sure. I think there are a couple of things. Anybody who's scaling at the rate we're scaling, again, we're growing our capacity, 5x from where we are today to where we'll be at the end of Q1 next year. So that's a pretty large amount of scale being added in a period of essentially what's kind of 9 months. So obviously ensuring the supply chain of all the components, mining hardware, containers, power, et cetera. That's a big pain point when you're scaling. But then it starts getting down to managing all of these, tens of thousands of miners. End of Q1, we'll have over 100,000 miners operating in multiple facilities. Now you've got to manage distribution of systems. You've got to manage climate-related issues with ambient temperatures. The northwest of the U.S. has been going through a huge heat wave. You're seeing parts of the country where the temperature normally never hits 100 degrees, hitting 110. And that has an impact on the mining industry, obviously. So as you scale, some things don't scale linearly. You have to have a step function scale. And having scaled lots of technology businesses over the years, this is just an operational scaling challenge that is just inherent. You have to put in place different systems to monitor and track what you're doing. You have to have more people able, sort of hands-on, boots on the ground, if you would, able to dig in and deal with things on machines, because if you have one site go offline that's producing 2 or 3 exahash all of a sudden, that's a big impact to your daily revenue. I mean, that's millions and millions of dollars of revenue in a week if you go offline on a site. So it starts becoming all of a sudden risk mitigation. How do I have now enough sites through dispersed power sources, dispersed geography, that allow me to operate my business where my single biggest offline risk is manageable? Texas is a great place to establish mining operations because it's an unregulated grid, and you have ERCOT, which has a huge amount of renewable energy inputs coming into the grid. However, you also have a large number of new people moving into the state. You have an increase in the demand for consumer electricity. And as some people on the prior panel said, there's a lot of energy that gets wasted because it can't get to the consumer. In the US, we generate and consume about 4 terawatts of power a day. And of that, 200 gigawatts is lost just on transmission lines. And so there's a great opportunity today for Bitcoin miners to act as load balancers for power providers. But for example, in Texas, over time, with the population increase, they're going to have to continue to build out their energy production capacity, while you also have Bitcoin miners coming in and wanting to deploy hundreds of megawatts. Our next deployment, which starts in this fall, running into Q1 of next year, we're deploying over 250 megawatts of power. It's a huge amount of power to be deploying at one time. And that's kind of the challenge. The scale is getting to the point where you really need to start diversifying your locations, diversifying your power sources, and trying to make things optimal.
Yeah, for sure. On that note, exactly, we've seen, well, you basically touched on the 2 main trends in sort of diversifying facility space and energy usage that miners are looking at right now. One is sort of the load and production balancing efforts for on-grid mining. We've also seen similar efforts exploiting, in sort of with good connotations, a bunch of otherwise wasted or simply stranded energy sources off-grid, mostly in North America right now through vented or flared natural gas, but other energy sources as well. Is this sort of, I basically, the question I want to get at is to know your thoughts on, or Marathon's strategy as they think through on and off grid, the future of on and off grid mining. How do you think about this evolution? Like, where, if at all, would you see Marathon sort of entering both segments of growth in mining, in terms of stabilizing grids, but also utilizing otherwise wasted, unusable energy sources? Open-ended question. What are your thoughts there, and how do you see Marathon sort of entering those 2 areas of growth in mining?
Sure. So we actually operate in both worlds today. Our Hardin, Montana facility was a stranded power plant next to an Indian reservation that had poor connectivity to the grid, and so there wasn't real demand for the energy. It was a stranded power plant. We're building out that plant now to its max capacity, which is a little over 100 megawatts. We'll have 30,000 roughly miners operating there by the end of the summer. And that plant provides, because of its power source and where it's located, a huge contribution to a First Nation tribe that's adjacent to the power plant, which otherwise they wouldn't get. So we're providing an positive economic contribution to this tribe. But more importantly, it's a power plant that was a stranded asset, and we're base load on plant property. In the case of what we're deploying in Texas and what we have in Nebraska, that's grid-based power, where we're taking power off the grid. And there we participate in load balancing programs. So we're operating in both worlds. I think personally, and I guess this is, I tend to be a little bit of a contrarian, but it's worked very successfully for me over my decades in the technology industry. Industries go from waves of centralization to decentralization, back to centralization. Mainframes, client-server computing, the cloud was a re-centralization of data compute resources, et cetera. The blockchain is going to see a major shift of pulling data out of the cloud and putting it now on the blockchain so that anybody can access data using apps as opposed to it being held hostage by Salesforce or SAP or other people like that. Power is going to go the same way. The grid, forget about Bitcoin mining for a second. The most expensive thing about power is distributing it and getting it to consumers. You invest all this money in renewable energy, and solar gives you 6 hours of energy a day, so you need battery power to store it. Wind gives you a little bit better profile, but again, it's typically somewhere where you don't have the consumers, and you can only transmit power about 500 miles through high tension lines, and at that point, it's lost. And so what the power industry is going through is from a centralized power with then distributions, but think of hub and spoke model. You're moving to community-based power. In the southwestern states that have ample access to solar and or wind, you're seeing communities and cities choosing to deploy power at community level. So here's an example. Los Angeles was going to build out a $4.5 billion gas-fired plant as a shaver plant to augment the grid and provide excess electricity based on consumption. Instead, they looked at doing community-based solar with battery backup, about the equivalent cost. And what community-based solar is, you essentially put solar panels on all these flat roof buildings and industrial parks in residential areas, and localized battery storage. Why is this an option today? Well, utility scale energy storage is very, very expensive. You're talking molten salt, you're talking pumping water uphill, things like that. Community level battery storage actually is not just doable, but it's affordable today. And so you're starting to see now this desire to start pushing power out at a community level. What that means is that instead of building a 30 or 50,000 miner facility, you can now start deploying small pods of miners in communities and act as a load balancer for that community. Now, at the same time, you're starting to see mining hardware become significantly more efficient. I would expect in the next 24 months, you will see miners where today the most efficient miners are operating in the 28 joules per terahash. You look at a Bitmain S19 Pro. You're going to start seeing miners operating in the 10 to 15 joules per terahash. So you've just cut the energy consumption of a miner per terahash by 50%. Now, what does that mean? Well, it means if the hash rate were constant, the grid would, essentially miners would be consuming 50% of the electricity they consume today. Now, all of a sudden, instead of being able to only put 10 or 15 miners in a pod, you can put 30 to 40, maybe 50 miners in a pod, a small container located next to the energy storage container, and you can operate that on a demand response basis. And communities now can use Bitcoin mining as a way to fund their energy build out. So you start seeing this ecosystem that becomes very, very synergistic. And it's a virtuous cycle. So, I saw this in the technology industry. I think we're going to see this impact of the blockchain on cloud computing, and we're going to see this in energy now to a great extent.
Sure.
And that's even before you say the word nuclear,
Sure.
which again is a wild card in all of this and complex because it requires a lot of local approvals and all that. Even if the technology is there and safe, there's still a psychological barrier today still. But I'm very optimistic about nuclear as well.
We could definitely have an entirely separate panel on Bitcoin mining and nuclear power, but I don't know if we have the time to jump into that today. But yes, also very excited for that growth. I have one more sort of larger question, then I want to jump into a couple of rapid fire predictions and projections with you.
Yep.
But one thing I do want to touch on is, which the previous panel also mentioned, sort of the regulatory aspect of all of this. We've seen in spades sort of the market effects of unpredictable, constantly shifting regulations from Asian countries that sort of catalyzed this whole shuffle of Bitcoin mining hash rate. And North American regulatory regimes are a bit more predictable, a bit more transparent. But I mean, no one really likes arduous regulations. And Marathon in particular has sort of probed different areas of Bitcoin mining and regulation that other companies haven't really touched. One example is sort of OFAC compliant mining, which, I mean, to be candid, was met with a variety of different responses. But regulation is something that's more and more top of mind for everyone in crypto generally, but more so with mining. I'm just curious if you can summarize sort of how Marathon thinks about interacting with regulators, maybe some gray swans that you've considered in terms of regulations on state and national levels, and sort of walk through at a high level your sort of strategy or maybe playbook for interfacing with regulators, plans for if in some situation North America becomes sort of a hostile regulatory environment for Bitcoin mining, for any of a variety of reasons. Like, how do you think through those scenarios and prepare for the best and worst case outcomes?
Sure. So great question. A lot to unpack there. Some years ago, when I first got involved in the Bitcoin industry, I was building an exchange and an OTC trading desk and interacted with the regulators in the US. And now granted, this is 4 or 5 years ago, realized that the US was not the place to do that, because you have multiple regulators here in the US, especially just around financial systems, the CFTC, the SEC, Treasury, et cetera, et cetera. Whereas in other countries, you have typically one financial regulator. And so I did those projects in Europe because it was a better environment from a regulatory perspective. As relates to Bitcoin mining today, the use and operation of the blockchain is a foregone conclusion. It's going to exist. There's nothing wrong with operating the Bitcoin blockchain, which is what miners do. Where the regulators have more concerns is around the use of Bitcoin as a tool as an investment asset, for example, and protecting the rights of consumers and investors. If you think back to when the GameStop issues happened with the meme stocks, and you had Robinhood unable to deal with the consumer's needs for, hey, I need to talk to a human being on the phone. My trade's not getting closed. You had a similar impact at Coinbase during the drop in the price of Bitcoin at the end of May. And so what we're seeing today, I think, from a regulatory perspective, there's a lot of pressure to regulate any consumer-facing crypto-related businesses. So the DeFi sector is, hypothecated. They are lending out based on leverage and models, which in many cases regulated companies would never be allowed to do. And so the regulators' focus is around protecting consumers primarily because they're the voters. Bitcoin mining isn't in their sights in that regard at all. Yes, there's been some energy FUD, but I think that's quieting down as we're now proving that, hey, we're 56% renewable in the energy consumption today, and it's going to only get better as more efficient machines, et cetera, happen. So I think what you're going to see is the SEC is going to figure out how to properly set the rules for a Bitcoin ETF. And the whole issue is it's a highly volatile asset. How do you deal with the ETF managing liquidity such that if somebody wants to sell in a free-falling market, they're able to get their, sell their shares in that ETF and get their money out. Same thing when it's a market that's going up. How do they deal with that? GBTC, Grayscale Trust is an example for the challenges there, where you could buy in, but you couldn't get out very easily. And so as the SEC forms their regulation around ETFs, that is going to be a major, I think, kind of check mark in removing hurdles to Bitcoin as an investment asset. I think, Bitcoin mining, otherwise, I don't foresee any North American issues other than potentially localized regulatory issues regarding power, like in New York, where the regulators there were starting to try and say, hey, we don't want renewable energy to go to Bitcoin mining. We want it to go to consumers. That I think the law has lost kind of its momentum in process. But I think really the regulators are going to focus on exchanges. They're going to focus on the DeFi businesses, get that sorted out. And then, Bitcoin, the horse is out of the barn there. You have people like NYDIG enabling FIS and Alloy and all these other payment providers and bank system providers to provide wallets where consumers can, hold, buy, trade Bitcoin and crypto assets as part of their banking app. 300 million consumers in the U.S. just through FIS and NYDIG alone will have access to that. I think that says that Bitcoin as an asset class and mining are kind of off the regulator's radar screen. It's more the exchanges and the DeFi businesses that are there.
I see. Yeah, that makes a lot of sense. And I appreciate the thoughts and explanation there. We are sort of coming up on time. I'm getting prompted. We have a couple minutes left. So we sort of touched on this right when we began chatting, but I want to wrap up sort of looking forward a little bit towards, maybe the biggest news, biggest attraction in Bitcoin mining now being the massive drop in hash rate, followed by large decrease in mining difficulty and a subsequent increase in profitability for miners who are lucky enough to still have machines online. You gave sort of a loose projection for when you think Bitcoin hash rate will recover. Obviously, companies like Marathon are in process of planning and executing on massive deployments of new facilities and new machines. But at the same time, sort of to a large extent counterbalancing that, you have a massive influx of machines looking for new homes coming out of the East. And so how long is this current market condition that we sort of got thrust in over the past 30, 40, 50 days going to last? Like, how long until hash rate recovers? How long is this sort of very profitable period for miners with machines online going to last? How long until the mining market returns to normal in your mind? Or are we going to stay in this sort of lull phase for this transitory phase for a while?
Well, I think if you look at the numbers that Biduda publishes regarding what they think the global hash rate, their estimate was at the low end about 145 exahash at the end of 2021, with a resumption to kind of trend line in kind of Q3 of 2022. I might be wrong on that number, but I personally believe that's a low estimate. Again, as I think I mentioned earlier, between the top 5 or 6 U.S. Miners, you're going to see 40 or 50 exahash coming online here over the next 6 months. You're going to see the Chinese miners relocating into Kazakhstan. That'll bring 20 to 30% of that capacity back online here fairly shortly. And then it's just a question of who can get access to power and hosting so they can plug in these miners that are in transit. And I think that's the constraint point today, at least in North America, is power and hosting. And so that takes 6 to 9 months to kind of get back on stream. But you've also got, as the previous panel talked about a little bit, retail miners coming back in. The sort of joker in all this, and I don't mean that in a comical sense, I just mean what we don't know is the price of Bitcoin. Bitcoin is trading in a band that was 34 to 40. We're now trading in a band that we're having a hard time staying above 32. If we go into a longer term trend that puts us below 30, we're rapidly going to move down most likely because the institutions are sitting on the sideline. They're waiting to see kind of some positive momentum and trends. There's still a lot of distribution happening, and by that I mean sales of Bitcoin. While the miners are holding, the bigger miners at least are, there are a lot of Chinese miners that had to sell Bitcoin to finance their move to North America and other places. And I think there's still pressure selling pressure on Bitcoin. The volume seems low on exchanges and trading. And so I think we're going into a period of kind of sideways movement in the marketplace. But if Bitcoin does take a leg down, all of a sudden there are a lot of miners who are using debt to finance their operations. They're buying a lot of machines on the expectation that they're going to be able to pay for them at a 30,000 Bitcoin. And if Bitcoin drops to 18,000, some people are not going to be able to operate profitably. And so that's something that we can't predict, but we have to model it. And, the big miners like Marathon and others, our cost to produce a Bitcoin is significantly less than $10,000 a Bitcoin. So we can operate in fairly bad environments from a pricing perspective. But that's not the same for everybody. There are some miners whose cost to produce a Bitcoin is closer to $10,000. And if the price starts getting near there, you start layering on corporate expenses, especially anybody who's gone public. They have $2 to $3 million a year just there alone in being a public company. You've got debt to service, you've got employees, SG&A on top of that 10K. So, I think it could be challenging for some miners. So, it's going to be a very interesting environment between now and the fall. And especially as more and more of this hash rate comes back online. It's really kind of a here and now. Who can produce here and now is going to benefit.
Sure.
I think the back half of next year is going to be less profitable just from a global hash rate perspective. And we'll have to see where the Bitcoin gods drive us from a price perspective.
Sure. No, I definitely agree. Between now and maybe 6-12 months from now, we will definitely see the Bitcoin network and mining industry much more robust, much more decentralized, but sort of negotiating the path between here and there. Won't be simple or easy. For some people, it'll be very profitable. For others, they will be sidelined for a bit, but it'll be an interesting process to observe, to say the least. With that, we are at time. Thanks so much, Brad, for chatting with me. It was super fun and educational for me personally, and I'm sure for our audience as well. So thank you.
Thank you. It's great to be on.
Well, thank you, Fred and Zach, and thank you for all the guests for the informative panel. And with that, on behalf of the Chamber of Digital Commerce, I'd like to thank everyone for tuning in, and that will conclude the event.